All right, we kick things off with oil. Despite what we've seen with the rising tensions between Russia and Ukraine, Brent crude earlier, 73.24. West Texas Intermediate still below $70. Benchmark in Nigeria, 77.96. This is now, as of 2025, January 1st, we're going to change this figure to $75 because that's the benchmark for Nigeria's 2025 budget. But for 2024, 77.96. Natural gas is down. Let's bring in Daniel Lacalle, PhD economist, chief economist at Tressis. He's over in Madrid as we kick off the conversations with oil. Daniel, it's good to have you. Good to have you on the show. Good morning to you. Despite the increased tensions between Russia and Ukraine, what do you make of what you've seen with oil? Are you in the camp that says demand and supply fundamentals carry more weight than geopolitical tensions?
Absolutely. I think that people need to understand that geopolitical tensions may create a bottom on the oil price, but don't make the oil price rise, or at least not for a prolonged period of time. Supply and demand dynamics are much more important, particularly now that the United States is producing 14 million barrels a day and has become the largest oil producer in the world. Therefore, people need to be more focused on analyzing the supply and demand dynamics when OPEC decides to stop the idea of increasing production. That is because demand is very weak, no? So I think that basically oil is set to be moving in a very narrow range as it is these days.
I wanted to get your thoughts on the latest that we've heard on the geopolitical front with, according to Reuters, saying that Russia might be open to ceasefire talks with Ukraine. What do you make of, I guess, the impact of that war on the global economy and what we've been hearing so far?
Well, a ceasefire would be phenomenal for the global economy. I think that obviously any talks that lead to an improvement in the situation in Ukraine are going to be very positive, both for trade, but also for the relationships between the large economies, Russia and the EU, China and the United States. So obviously a ceasefire would be, I would say, something that would certainly make a significant impact on global growth, but also improve significantly the position of the euro area in economic terms now that the euro zone is particularly weak, no? So I think that all of those things have to be monitored. If I have to think of anything, obviously, is that if that ceasefire happens as well, commodities are not going to be increasing in price, but they're not going to be decreasing either because of what I said before. I think it's important to understand that the geopolitical tensions are worse for economic growth than for the price of commodities. Therefore, it would be better to have a ceasefire and improved economic growth rather than geopolitical tensions and weakening of manufacturing and global oil demand.
You mentioned China there. I wanted to get to Asia now. This morning, they left their loan prime rates unchanged. I think 3.1% for the 1 year, 3.6 for the 5. But we also understand that exchange traded for ETF outflows are on the rise from China, as far as those focused on particular China stocks. What's your assessment of China's economy so far?
Well, I think that what we need to understand is that the Chinese economy is doing pretty well considering the challenges on the real estate market and the challenges in some of their most important export clients like Germany. So if we look at the GDP growth of China, 3.5 to 5%, which is likely to be closer to the 5% in 2024, is a very, very good figure, considering the very, very significant challenges that the Chinese economy has in terms of the real estate market, and worse, the weakening of exports because of the recession or stagnation of the euro area economies. So I think that all of that shows that the Chinese economy is going to be the first one in history, or at least in the data that is available to us, in which the economy is going to grow with such a large slump in real estate. If you remember the United States, Sweden, Ireland, Iceland, Spain, so many countries, Japan, that have gone through a similar situation in real estate, none of those economies grew. Either actually, most of them entered into a recession in a period of real estate slump. In the case of China, it's going to grow between 4 to 5%. So I think that the Chinese economy is doing pretty well, to be fairly honest.
All right, thanks for the breakdown there. Let's move to the second largest economy in Asia, that being Japan. They just released their trade numbers this morning. Exports rebounded in October, though there's still a bit of a trade deficit 4 months in a row now. Japan is a very export-oriented economy like China. What's your assessment of what we've been seeing from the Japanese economy?
Well, I think that the Japanese economy is basically caught between a rock and a hard place. It tends to show relatively strong numbers from time to time, and then relatively weak numbers to remain basically in stagnation, which is where it is right now. No? The stagnation of the Japanese economy comes from numerous factors: massive government spending, huge deficit spending, and large debt to GDP. Additionally, because of the demographic situation, slowing an aging population and a declining population. So aging and declining population are elements that are going to certainly impact economic growth. Large public debt and large deficits even more so. Therefore, I think that it's going to be very difficult for the Japanese economy to extract itself out of the stagnation in the current environment.
I want to get to the United States. We had you before the U.S. elections. I want to play something that you said about Donald Trump and then get your comments out because everybody's talking about tariffs. Here's what you said on our last interview.
What we have seen from the historic knowledge is that Donald Trump is a negotiator. At the beginning, it always looks like he is going to impose something very negative and that is going to be very drastic, but always negotiates and negotiated a very, very positive trade deal for Mexico and for the United States as well.
Do you still feel the same way? Do you think that the tariffs that Trump has talked about on the campaign trail won't be as harsh as promised?
Absolutely, absolutely. Trump is a negotiator. If global economies negotiate with the United States a better trade environment in which in most economies, what we have is a lot of protectionism against the United States. No, most economies want to export to the United States, but they don't want U.S. companies and U.S. imports. No, so it is a negotiation tool, and it will happen. So countries that will negotiate, as they did in 2016 to 2021, will have their tariffs removed, and countries that don't want to negotiate will pay the tariffs. So that is unfortunately the way that it has to be. The problem in global trade is that rising protectionism is not coming from tariffs. It's coming from regulation, it's coming from taxation, it's coming from environmental excuses, it's coming from subsidies, no? So the United States is losing between $600 to $650 billion a year against China, $250 billion a year in trade against the EU. So basically the way to address that is not going to be by implementing the protectionist measures of other countries. What it's going to do is to put tariffs, and if those countries renegotiate and allow a more balanced approach to trade with the United States, then it's fine. And if they don't, there will be tariffs.
All right, fascinating years ahead. We'll see how things work out. To the UK, I want to get your thoughts. I mean, we just got inflation figures for the UK for October, climbed up to 2.3%. The new government in power, the Labour government under Keir Starmer, they've put forward new budgets. Rachel Reeves, Chancellor of the Exchequer, about £40 billion worth of tax increases. What's your assessment of what lies ahead for the UK economy?
The UK economy is in a very bad shape. The UK economy has missed all of the opportunities that it had from Brexit. It could have been the new Switzerland. It could have been a global investment and a capital attraction center. And instead, after Brexit, It kept all of the negatives of the European Union and none of the positives of being an independent nation. No, so I think that is not likely to improve with a UK budget that has been presented, and it's been an absolutely atrocious outcome. Everybody that has looked at that budget is seeing that the UK economy is going to get worse. It's going to be much worse for investment, much worse for capital attraction, and much worse in terms of deficit and debt. So no wonder inflation remains persistent and economic growth remains stagnant. It's very, very challenging, the UK.
Daniel Lacalle, a PhD economist, senior economist at Tressis. Always a pleasure going through the global economy with you. Thank you so much for your time, joining us live there from Madrid, Spain.